Will QE arrive on Thursday? Let's have a look. Hello everyone, Florian Heise here and welcome to another episode of HeiseSays. I have my morning stein of coffee and I thought we'd have a look at this article that was written by James Hall from news.com.au discussing the emergency meeting that the RBA is going to have on Thursday and, well, all likelihood that rates are going to be slashed to 0.25 and QE is going to appear in Australia. Now, for those of you who are not familiar with the term, QE is essentially printing money, buying bonds, other securities, and reducing all of our purchasing power, bit by bit by bit. It's happening in the US, and as well as that, they also have the repo market, where the Reserve Bank creates money out of thin air and lends it, at different periods from a day to a couple of months on holders of treasuries or mortgage-backed securities. And where do you think that money goes? Usually, it seems to be into the derivative market, stock market, inflating all of that up. So there you go. And you have to realize, guys, whenever this money is created, it's additional monetary supply, so it reduces the purchasing power of our money. I guess it's one way to get inflation. It'll keep the RBA happy, guys. It'll keep them happy because they're such a well-oiled machine and their predictions are spot on, as you can see from all of their wage growth forecasts. Now the question is, how long until people eventually lose confidence in money, in the currency that they're using, in the almighty paper dollar? We'll have to see. I know many people are pinning their hopes on gold or silver, which took a beating. Cryptocurrency, which also took a beating. We were watching it here on the channel last night. Everything was going down. It's definitely exciting times. And I get the feeling we're all living through a piece of history now. So, and one takeaway from that is, it always works out in the end. It'll always be good in the end, guys. Don't let it get you down. If you lose money, you lose money. So, the RBA is calling an emergency meeting to slash rates to 0.25%. And it's inevitable. Because they've got nothing else left in the tank. They've already fired all their shots. Do you think if they had have held on with higher interest rates and waited, but, hindsight is always fantastic, 100% accurate. This is telling me that we're really seeing a black swan event here as a tremendous disruption to the global economy, and they didn't cater for that. They didn't plan for that. The question is, will they go negative? Will they go negative interest rates? And then all the people who made the noise saying, no, all you people worried about negative interest rates and the cash ban, you're talking rubbish, you're crazy. Well, we'll have to see because it's happening all over the world. The Reserve Bank of Australia will meet on Thursday 2 weeks ahead of schedule. And analysts now say an emergency rate cut is all but inevitable. The RBA is now expected to slash the official cash rate to 0.25% this week as the spread of the illness continues to cripple the economy. IG market analyst Carl Roeder said in a note this morning, the extraordinary RBA move was made to address how to best support the Australian economy through the virus risk. Now, will this actually support the economy? I guess it'll give people more spending money, but are people going to go out and spend in the... I get maybe they are. They'll go out and they'll hoard shop more. Is that what's going to happen? We'll have to see, guys. We will have to see. I mean, I will happily accept any interest rate cuts to my mortgage and pay it down quicker. But then again, it could be smarter to hold off. Because when we get negative, are we making money off my mortgage? No, they'll find a way to pin you. But I mean, there are some people in Europe that are actually getting payments for having debt. I mean, we're living in a clown world. This has to be a clown world. People can't say that this is normal and functional of a financial system if we're getting these mixed up clown world phenomenon. So it's widely tipped that the RBA will cut its cash rate to the effective lower bound of 0.25% and most likely announce its own quantitative easing program, he said. The central bank wasn't scheduled to meet until the first Tuesday of April. If it does cut rates on Thursday, it will mean a fresh historic low for the country. This trigger wasn't leaned on during critical stages of the GFC or the upheaval of 9/11 and would signal the seriousness of the current economic woes. Well, yes, I mean, unemployment, guys, this is one to, well, job ads are one to keep an eye on, and unemployment is definitely one to keep an eye on. Because, I mean, what are you hearing? Guys, let us know in the comments. I've got family members I know that they're getting hours cut significantly, people being asked to take leave. This is going to affect the economy more than people realize. It is going to dash business confidence. So then all the stimulus in business, I wouldn't be ballsy enough to invest in any capital now. You know, I at the moment, we've got enough work on for a couple of months. But I wouldn't be investing anything. Every piece of software I'm leasing, you know, month by month. Okay, I've used that software for that month. Okay, I'll cut it for next month. Savings. I can tell you I'm really happy. I'm really happy. You know, last couple of years, we've scaled back our whole business. I don't have a premises anymore. I've got rid of the staff. I just get contractors when I need, or it's Rachel and I doing everything. Because, you know, consumer confidence is going to take a hit. Building approvals. Look at the dwelling units approved. That was a huge decline there. I think 35% for that sector. And I know it doesn't... the other private house sector is slightly ticked up, but it's a big hit, guys, when you look at these seasonally adjusted numbers. So yeah, the economy is going to cop it. And then, you know, just tourism, $60 billion it was. We'll have to see what it's going to turn into. International flights are taking a hit. Trade is taking a hit. Even if solutions are found very quickly, there will be months and months of slowdown, and that will affect the economy. That will drive Australia into a recession. And it'll be interesting to see how we come out of this recession if we learn some valuable lessons. We'll have to see. Hopefully we'll become more than a quarry and just flip houses. So the Australian share market lost $232 billion last week and tumbled again at the open this morning as businesses across the country grind to a halt. Prime Minister Scott Morrison announced mandatory self-isolation for travellers arriving from overseas. Non-essential gatherings of more than 500 people have been suspended, and various sports and cultural events were called off to contain the spread of the deadly illness. The RBA move would mirror the Federal Reserve in the US and its NZ counterparts. Well, they've made much more drastic moves. We seem to be, you know, clutching at straws. Well, it'll be a 0.25 or 25 basis point cut if it happens. Do you think they'll go to zero? Do you think they'll go straight to zero? That'd be more exciting. That'd be more exciting. So effectively encouraging consumer spending by printing more money and pumping it into the economy. Yes, but how are they pumping it into the economy? That's the thing. We're not getting a debt jubilee. Wouldn't that be smarter? I mean, they're generating money out of nothing. They're generating it out of nothing. They want to try and get the wealth effect by stimulating the stock market. Is that going to work? No, it's not as effective as the wealth effect in housing. So NAB released a market research note yesterday detailing the urgency for the RBA stepping in as the national and global economy continues to rapidly deteriorate. There seems little point in waiting 3 weeks to deliver further support to the Australian economy on the interest rate front, the Economy Watch note said. AMP chief economist Shane Oliver said the volatility plaguing global markets reflected the huge uncertainties the pandemic had created for investors. They're just trying to work out how long the illness will continue to impact economic activity and by how much, he told news.com.au. And at the same time, they're also having to allow for the policy stimulus which might not offset the flow on from the illness. It's not going to stop people getting sick or staying at home, but it may stop companies going bust and households defaulting on their loans. These are the things, guys. This is the arrears rates, or the last data I checked. Look at Western Australia and Northern Territory. How many people are 150 days worse off? If we have lots of people getting laid off, lots of people turning to welfare, lots of people in very high mortgages, what's going to happen? Are people going to start losing their homes? And that's where you may get the snowball effect. Are the banks going to do what they did in the US, where they just didn't repossess or didn't start calling on houses? So that's why central bank help is very important, they're saying. Deloitte Axis Economics partner Chris Richardson said, given the actions taken by economic policymakers in other countries, the RBA can't be seen to be sitting on the sidelines. This is definitely a pedal to the metal moment, he told news.com.au. The difference between Australia and other nations won't be interest rates. It will be the ability to use government budgets to pitch in on the fight. And you'd prefer to be us? Really? We began this with a healthier budget than almost any other rich nation in the world. Really? I think a lot of states are in debt. I know Queensland's down the gurgler. We're completely dependent on our relationship to China. I mean, let's bring up good old Observatory of Economic Complexity, guys. Our economy is ranked at 59th in the world for the OECD, for the Observatory of Economic Complexity. I will bring up the Harvard Atlas. Here we are ranked even worse. Once it comes up, I think 93rd in the world. Let's see if I remember. Yes, 93rd in the world. That's because Australia is essentially a quarry. We don't even process the ores that we send overseas into metals. We send the raw ores over there, pretty much. You know, we import all these expensive things. All these expensive things. So I'm just going to bring up trading economics and let's have a look at how the dollar is sitting right now. Because it briefly hit 60 cents last night, so 61.1. So there you go. So, do you think Australia's well suited to weather this? We got lucky. We got lucky at the GFC. We got lucky, and because of that luck, now where so much of our civilization's wealth has been ploughed into housing, 57% of it. How much of our super is indirectly linked to that? How much of our super is in the retail sector? How many of the super funds own all these shopping centers around the place? They're pumping millions of dollars into refurbish them when no one's going to go shopping. If for 6 months the retail sector, which has been in recession, cops it even worse. So, maybe tough times. The health-based cause means the current financial crisis and looming recession is unique, Dr. Oliver said, and therefore should by nature be temporary. What about the tremendous amount of debts that we have, our dependency on countries that have taken huge economic damage to this? I mean, this is kind of a pointless statement. Everything is temporary. Yeah, every economic decline is temporary. What's the point of saying that? It's just how long it will take. Will it be 1 year? Will it be 2 years? Will it be 10 years? Some people are predicting Australia's going to have 10 years of recession. The biggest concern I have is we're going to end up like Japan. That we're just going to end up like Japan. Once that disruption is removed and the illness has run its course, things will rebound a lot faster than we saw with the GFC or past recession, the leading economist said. Well, possibly it could. But if things are allowed to get too bad, then companies might start going bust and households might start defaulting on their loans. That's the risk right there. That's the risk. And he's right. If you lose that capacity, it's going to be a lot harder for people to tool up again. It's going to be a lot harder. We'll have to see what happens. So guys, there we have it. Potential for QE in Australia this Thursday. Did you think it would come this quick? Are you worried? Let me know your thoughts and opinions in the comments below. But before I go, here's one question for you. One question. I was talking to Mina that there's potentially a treatment for this illness. I was telling her, look, they've discovered these all drugs that if they apply to it, it's been looking at being quite effective. If this whole crisis is dealt with, it's resolved, and in 6 months to a year's time, it's under control, the economy is slowly building up. Do you think the people that think the world is coming to an end by climate change, the environment, which is a much slower moving disaster than this, do you think they will back off and realize, wait a minute, humans are pretty ingenious. We're operating on a level that previous civilizations never have. We're coordinating on the entire scale of humanity to some extent. Why should I be worrying and fretting and protesting about this thing, which will most certainly be dealt with? Why should I be sacrificing my quality of life and my children's quality of life for 100 years in the future when we dealt with this dilemma so very quick? What do you think, guys? Do you think people will learn the lesson? Or do you think they'll be belting each other over the head for toilet paper till the end of time? Let me know your thoughts and opinions in the comments below. Thank you all for watching. Please like, share, and subscribe to the channel. If you're a fan and you want to help us produce more content, there's a few ways you can support us. You can share the videos, help the channel grow. You can support us financially via Patreon or via joining the channel here on YouTube for a small monthly donation. You can use our affiliate links at Amazon or eBay for your consumer purchases, particularly if you're staying at home at the moment. You can also use our affiliate links for Independent Reserve or Kucoin for all the crypto traders out there. We have merch available from the HeiseSays website and from Teespring link below. And finally, PayPal if you want to contribute that way. Thanks to everyone who's helping support the channel. Take care, guys, and I'll see you in the next video. Bye for now.